Hey guys, welcome back to another video, and today we're going to be talking about federal income tax. So until 6 months ago, I had a huge misconception of how federal income tax worked. I thought that whatever tax bracket you were in, all your money was taxed at that level. So I had this really great discovery, and I told myself, you know, Dad, it's actually better to make $380,000 than $450,000, because if you make $450,000, you'll be at this higher tax bracket and you'll actually make less money. And I was like blown away by my discovery until I discovered that that was absolute bull. So that's not at all how federal income tax works. There's something called tax brackets. Currently there are about 7 tax brackets. There's, I think, 10%, 12, 22, 24, 32, 35, 37, and with Biden's new tax plan, there could be a 39.7% tax, which is going to it's going to be the highest tax bracket for individuals earning above, I think, $500,000, something like that. So yeah, these tax brackets work completely differently. So until that amount, you make $10,000, you're taxed at 10%. And then any money from that until the $12,000, you're taxed at 12%. Anything above that, you're taxed at 22, 24, just like that. So all your money is not at all taxed at one amount, which was, I just figured that out about like 6 months, maybe a year ago. So yeah, I was not very smart when it came to that. Now, more things related to tax is how is tax calculated? What amount is tax taken on? And that's where you come with your AGI. Adjusted gross income. So that's basically all the money that you make. I'm going to be making a video about payroll taxes, and that's just about payroll, so how much you make from your job or whatever. Your entire AGI, your adjusted gross income, is all your different sources of revenue that you make in a year. So you got your job, you got capital gain, you got stocks, you got some side hustles, some passive income. All this added up is going to be your AGI. Now, you don't have to pay tax. If you're a person making $100,000 a year, you're not going to end up paying taxes on $100,000 unless you know nothing about how taxes work. Then you'll end up paying $100,000 taxes. But there's something called MAGI, or MAGI, which is modified adjusted gross income. So this is where something called deductions comes into place. So deductions are a way to, if you make $100,000, there are a certain amount that you don't have to pay taxes on. Now, based on how you're filing your taxes, which we'll talk about later, the deductions are very, very different. There's 2 major types of deductions: standard deduction and itemized deduction. Standard deduction is a fixed amount that you can deduct from your $100,000. So let's say the standard deduction is $10,000. Instead of paying taxes on $100,000, you will only pay taxes on $90,000. The next is the itemized. So that's a very simpler way of just don't pay taxes on that. Itemized is on each item you have to pay, you can deduct taxes on. So for different people, the different standard and itemized, I can't recommend one to you, because for every person they have their own situations, their own way of dealing with things. It's going to be beneficial for different type of people. So for some persons, standard might be the way to go, and for others, itemized might be the one that saves them most money. So you don't have to pay taxes on that. Then also just throwing it in there, on all charitable donations, you do not have to pay any taxes on. So if the person who's making $100,000 gives away $10,000 of his dollars, immediately his AGI is $90,000, and with this $10,000 standard deduction, just as an example, it becomes $80,000. So yeah, that's basically how deductions work in taxes. So you have your AGI and your MAGI. Now, next thing is filing status. So this makes a huge difference on how you're going to file your taxes. Currently, there are 5 different filing statuses. You can file. I'm not going to bore you with all this information and all these numbers. If you want any specific numbers, just go to irs.gov or NerdWallet, or there's a lot of great places, but just go to the IRS website and you'll find the exact amounts for each of these statuses. It's just way too much to crunch in and explain, and I don't want you guys to fall asleep. So the 5 statuses are single, married filing separately, married filing jointly, widow, and head of household. These all have different amounts, different brackets, different money that is taxed at. The standard deduction greatly varies. If you're single, it could be around $12,500. If you're married, it could be around $25,000. So you have to just go on to IRS and just see all these different things. So yeah, that's basically how it is. So there's 5 different types of filing statuses. Your taxes is, your payroll plus all your other streams of taxes. The more money that you make, the top of that money. So if you make $100,000, the first $10,000 will be taxed at 10%. The next $10,000 might be taxed at 12%. The next $25,000 might be taxed at 22%. So if you add all this up, and at the end, how much ever taxes you pay is kind of the adjusted amount for paying taxes. So even though you might be paying some of your money at a super high tax bracket, you might not be, your adjusted tax might only be way less because it's not all paid at that. Now, Roth IRAs, 401ks, there's a lot of other ways to reduce your MAGI, your modified adjusted gross income. If you contribute to a 401k, like the video that you've seen, if you haven't, you can go see that video right here. If you contribute to a 401k or IRA or whatever, where you don't have to pay taxes now, anything you contribute to that you don't have to pay taxes now and you just pay for it later, that is part of that, and you don't have to pay taxes on now. So that's part of your that'll be part of your adjusted gross income. So now, yeah, that's basically it. There's a lot of other taxes can be a little complicated, a little bit intimidating, but learning about it is very useful. You should try doing it. There's a lot of different other deductions as well. If you use something for business purposes, there's a lot of business write-off. Total another video. I just found this that if you're blind, you get an extra $1,300 deducted. If you have a dependent, a child, you get another extra deduction. So there's tons and tons of deductions, and make sure you're updated about the laws and stuff. With Biden's new tax plan, there could be an 8th tax bracket of 39.7, so 40% for the highest earners. So yeah, that's basically it. That's how federal income tax, the ins and outs of federal income tax. Hope you enjoyed the video, and yeah, I will see you next time. Bye.